Hey folks, welcome to the 6th of May. Happy Friday, happy NFP day, and what a down day we saw yesterday. So we did a full round trip down from the bids that we saw on Wednesday from Jerome Powell, on Thursday from Wednesday from Jerome Powell. Um, really massive down day, almost 5% down on NASDAQ on the close. Similar 3% down on Dow on the close, and I can't remember, we were at least 3% down on SPOs. So huge unwinding, the market really unraveling, a lot of positioning across the board in equities. There was really no refuge. Oil was getting sold, euro was getting sold, dollar was bid, of course. Gold was getting sold, everything, bonds, everything was just sell everything sort of a session. And we have had little respite and retracement from those lows in the overnight and of course in this European session so far. So NFP to come today. Is this really going to be that important in the grander scheme of things? Well, I mean, obviously it is important. The street looking for 391,000 on the headline figure today, prior 431,000. I think this market needs a good number, but in saying that, even if we get like 500,000 on beat on NFP today, I'm not seeing the strength in this market at the moment. Now, of course, the best buying opportunities are always when you see complete weakness in the markets, and when everyone else does not want to touch it. So you really have to kind of balance that with how you want to approach the sold down lows that we've seen last week. We haven't breached the lows on the week, of course. Couple of trends coming in. I'm going to show you on the SPOs and the Dow here that may be food for thought for the bulls. Look, let's get over onto these charts and have a wee gander. So, of course, we'll start off with the main show on the S&P 500 here. I've taken off the range just to have this quite clean, and so you're seeing here daily bars on the SPOs. Of course, the main culprit here, I said it yesterday, the swing traders and the moving average traders are just absolutely making out like bandits in these markets. Wednesday up to the 20 moving hour exponential moving average, and yesterday high up day put in and then sold right the way down to put in now what we have as a sort of a trend here on the lows. Look, a lot of the levels I was talking about, I think I was talking about 41.29's half yesterday as being a potential for buying. I think that's still on the cards for a potential for the bulls today. We are aggressively down at the moment in the S&P 500 and just across the equities index indices in total. So from the all-time highs to where we are, we're down 15.5% on the week. So currently at market, we're down 14.12% on the SPOs from the all-time highs. So, can we go lower? And I think obviously we can. There is this gap again. I'm going to talk about 39.96s to fill below. So that would actually require 39.76s to trade. And buyers may come in and lift that. Just something I was kind of looking at yesterday was, and I'll talk about this on the Dow where it's more apparent, but I think testing down into here, it's just too cheap. It's just way too cheap. I think we're going to be trading into early 2021 levels. Maybe the S&P is probably trading on the higher side of forward earning multiples by comparison to the Dow. Certainly the NASDAQ is kind of out in the front of its skis a little bit, too much to borrow a Paul Tudor Jones phrase. But from big selling come great buying opportunities, and of course there is one man putting capital to work at this time, and his name is Warren. So here we are on the SPOs in the center of your screen. 41.29 is half, not holding anything this morning so far, and the trend to trade down below. Looking out on the NASDAQ on the dailies as well here, you got the range. We're we're still holding the range bottom here, if you like, which is put in as the low of the 1st of Feb 21, and the high of the range is the April highs of 2021. Anyway, and to talk more about that, we have 2 days of support. Yesterday, this was the turnaround point for the NASDAQ, as you can see here on this daily bar here at this point. So, if this breaches to the downside, I think we are going to have a lot of capitulation. We're going to run quickly through the 12,593s half and keep going. Get on that trade. I mean, switching over to the 60-minute view here, that would be sort of a break into this area. Look for the pullback. See if you can get a candle of an hour closing here, and then down we go. Yeehaw to the downside. I am open to buyers coming in and defending this area and then trying to drive us back up through the range. But, very hard to stand by that view at the moment because we've just seen, a lot of capitulation across a lot of very highly priced stocks, tech stocks at the moment. ARK is down 50% on the year. I think it's trading off the 2020 highs of 159. It's trading at $49. Cathie Wood. I believe in Cathie, but I also believe in Michael Burry. I think Cathie's taking a lot of heat. She's got a 5-year outlook. The guys were telling me on that portfolio. And I hope she has a ton of dry powder, because if she loved these prices, 6 months, 12 months ago, she's going to absolutely be enamored with the prices now, right? So that's the the NASDAQ. And then on the Dow, just something to note. I was kind of thinking about, the big sell-off that we got down here, right, on the Dow. And, generally the COVID sell-off. This was actually the high of, as a historical level, right? This was actually, and I don't know if I'm loading enough days on this chart. I am actually loading enough days on this chart. So if we cruise in here, I just want to kind of remind people where, in the grander, biggest time frame possible, grander scheme of things. Does anyone remember what was happening in September, October, November 2016? Well, there was a guy called Donald running for the presidency, and really the market was afraid to do anything apart from kind of sit in a tight range. That was the COVID retracement level where we sold back down to, all right, during COVID, to the tick, pretty much to the tick, and we've come on up here. Now, the reason I'm talking about that is really just to put in context where we've been and where we've gone to, where we started on this rally and then where we got to, and generally this green area, right? I'll blow this on full screen. This green area is generally the sort of mother up channel. And so you can kind of see that we broke out of that in 2021, right? And pushed on for new highs, all right? Really handsome new highs there, right? But it kind of, these highs really go back to, this whole area goes back to like April 2021, right? All of this is most of 2021's value creation here. And look where we sit right now, okay? So we are way out front of our skis in terms of the general linear sort of appreciation of this market, which is this channel below. I think in the bigger scheme, we need to trade down here onto the top of this channel at least before finding any buyers. And actually, in the grander scheme of things, over the next 12 months, I think we need to trade down to 27,600. That's it. You said it. That's where Tim gets cancelled by the trading community for a call like that. But hey, I think it's way too cheap. But I think we could get it. We're breaking uptrend pattern here. We've pierced through the low of this basically 2021 party here. All right. So putting pressure down here, ain't no one going to be stepping in to buy this thing once we breach 32,610s and hold. There's no one's going to be buying this dip until we get to 31,200s. Why would you? Why would you? when you could simply just wait for better prices, technically better prices. All right, that's my big view on the Dow for the moment. Um, so again, bit of a trend coming in, but once we've broken this trend on the Dow, I think you could look at this trend here, but generally when you break the master trend, it just keeps breaking and breaking and breaking until you stop, trying to buy it, and then of course it goes up. But yeah, just wanted to mark everyone's card here on the Dow, on generally in these markets, right? Generally in these markets. So I think it's key that 32,919. If the bulls are going to hold this area has to, this area 32,610s to 32,809s. This area has to. This is the last stand for the buyers in the Dow. That's it. That's our last stand. If we cut below here, as we did a little bit last night, it's sayonara. All right. Anyway, oil, looking around here on oil, doing a great job of getting back up. As I said, through the 108.28s, we're starting to eat away at this level yesterday. Got out the top of this on the 110.72s, and just pulled it all the way back here. Before then, kind of trying to retrace some of those gains, or sorry, to retrace some of those losses into the close. A little bit of a gap, then filled over the NYMEX Globex reopen. I think I've been long oil this morning as well, and I think we can now find buyers on 109.95s and bid for 112.86s, and these prices are basically in process of getting dialed in now, priced into the market, so that we should get that pricing in today of that upside risk. And a little bit of commentary out of the European Union this morning, putting a bit of a timeline on, saying, well, in 3 months the bans will come into effect. That is not rubber stamped yet, though, but that is the commentary and the forward guidance that we're getting from the European Commission on the Russian oil ban. So, just to mark your card on that one. All right, so yeah, I think further upside on oil. I cannot see what's going to pull oil down into a negative positioning on the day. We're currently up 1.6 on the session. Nat gas, as you'll see here, is just ripping faces off left, right, and center. I don't know why you'd be selling nat gas. Even Stevie Wonder could tell you don't need to sell nat gas right now. You need to be long this thing. It's going to 9.327, going to 10.215. And it's going to happen within the next 5 trading sessions, if you ask me. Okay. And what else are we seeing? Yeah, dollar euro picture. It's very unclear. Just to show you here, we're sort of settled into this upper range on the trend on the dollar, which we had to pull back and test, then bid yesterday. And we've now kind of topped out on a new. This might be actually a new 10-year high on the. Or certainly a new 5-year high on the Dixie, and just then pulling back. So can we hold into these highs, or are we going to breach the trend? I think if we come down and retest the trend here, we're gonna breach to the downside, and it's E-half longs for the euro at that point. Okay, that's it for me for another pre-US session. Got to be careful out there today. These equity markets ripped a lot of faces off for the bulls yesterday, so watch out. I think there's some big trading opportunities to come once we get into the US session. That will be an hour after NFP, and we've now got 26 minutes until NFP. So if you're watching this on Saturday morning, I hope you did well. And to the guys on the team, best of luck. All right. Cheers. Talk to you soon. Bye-bye.